Picture this. You're holding a piece of paper that isn't real money, just a promise to pay sometime in the future. But here's the trick. Every bank in your country is legally required to give you cash for it, and the central bank guarantees it's good. So naturally, you spend it like real money, your suppliers spend it, and their suppliers spend it too. Soon billions of these fake IOUs are circulating through the economy, building factories, hiring workers, and producing tanks and aircraft at a pace that seems impossible. Then 5 years later, someone finally asks the obvious question: who's actually going to pay for all this? And the only answer turns out to be invading your neighbors and looting their gold reserves. This isn't a thought experiment or some theoretical scenario. This actually happened, and it explains one of history's most baffling transformations: how Germany went from total bankruptcy to fielding the most powerful military in Europe in just 6 years. In January 1933, the country had 6 million unemployed citizens, hyperinflation trauma still haunting every household, and international treaties legally forbidding any weapons production. By September 1939, they possessed the largest mechanized army on Earth, fully equipped and ready to conquer a continent. 35 billion Reichsmarks appeared seemingly out of nowhere to fund this transformation. There were no gold reserves backing it, no foreign loans providing capital, and no money printing that would trigger another hyperinflation disaster like the one that had destroyed German savings just a decade earlier. Instead, the Reichsbank, Germany's central bank, created an entire shadow banking system that functioned completely outside the official economy. And when the scheme's built-in 5-year timer finally ran out, war became the only possible escape route. The wildest part? Your central bank uses the exact same mechanism today, just with different terminology. The Reichsbank called them Mefo bills, while we call them quantitative easing and asset-backed securities. But the core trick, creating money that doesn't officially exist until someone eventually asks to be paid, hasn't changed at all. The man who made this financial alchemy possible was named Hjalmar Schacht, and he wasn't some radical outsider or economic revolutionary. He was the ultimate establishment banker. As president of the Reichsbank, Germany's central bank, Schacht was internationally respected, trusted by Wall Street financiers and London banking circles, and spoke fluent English with American bankers who considered him one of their own. This wasn't a fringe figure operating in the shadows. This was a man who moved comfortably through the most elite financial institutions in the world. When Hitler asked him the critical question, "How much money can you provide for rearmament?" Schacht's answer became infamous: "Every amount, my Führer." It was an audacious promise, bordering on the insane, because the constraints he faced made it seem genuinely impossible. The Treaty of Versailles explicitly forbade military spending, making any rearmament program illegal under international law. German domestic law capped government borrowing at a laughably small 100 million Reichsmarks, barely enough to keep basic operations running, let alone fund a massive military buildup. Interest rates were capped at 4.5%. Preventing the government from offering attractive returns on bonds. International credit markets remained completely closed to Germany after World War I, and the country had virtually no gold reserves to back any currency expansion. Yet, Schacht had something that made his impossible promise achievable: unprecedented power over the entire German financial system. He attended every cabinet meeting, controlled all banking policy, could veto any economic legislation, and held total authority over the Reichsbank without any meaningful oversight. This concentration of power in one banker's hands was extraordinary, and Schacht intended to use every bit of it. His plan was breathtaking in its ambition: 35 billion Reichsmarks channeled into rearmament over 8 years, with the first 4 years building defensive capabilities, and the second 4 preparing for offensive war. To put that in perspective, this was more money than the entire German government was legally allowed to borrow by a factor of 350. The risk was total currency collapse if anyone discovered what he was really doing, but Schacht had figured out how to create money in a way that would leave no official trace, at least not for the first 5 years. The mechanism Schacht devised was elegant in its simplicity and devastating in its implications. In May 1934, he established a company called Metallurgische Forschungsgesellschaft, or Mefo for short, which sounded impressively technical, but was actually nothing more than a legal fiction. This company had exactly 1 million Reichsmarks in capital, no employees, no factory, no research facilities, and no actual business operations whatsoever. It existed purely as a name on paper, owned by 4 major German armament manufacturers, Krupp, Siemens, Rheinmetall, and Gute Hoffnungshütte, who each held a 25% stake. MEFO's sole purpose was to issue promissory notes that would circulate through the German economy as if they were real money. Here's how the system worked in practice. When the government wanted to order weapons from an armament manufacturer, instead of paying with actual Reichsmarks, they paid with a 6-month Mefo bill, essentially an IOAG that promised payment in the future. The manufacturer would take this Mefo bill to any German bank and immediately exchange it for cash, no questions asked. The bank now held the Mefo bill, which earned a respectable 4% annual interest, making it attractive to hold. Within the final 3 months before the bill matured, the bank could take it to the Reichsbank and exchange it for actual Reichsmarks. But here's where Schacht's genius became apparent. The bills came with a provision for indefinite 90-day extensions, and by 1939, the maturation period had been stretched to 5 full years. This meant that money could circulate through the economy, building tanks and aircraft and entire factories, without anyone ever actually having to pay for it immediately. The manufacturer got cash, the bank earned interest, and the Reichsbank's balance sheet showed nothing unusual because these weren't officially government loans. The beauty of the scheme was how it bypassed every legal constraint simultaneously. It wasn't technically government borrowing, so it didn't count against the 100 million Reichsmark legal limit. It didn't appear in published government budgets, so rearmament spending remained hidden from international observers trying to enforce the Versailles Treaty. It circumvented the 4.5% interest rate cap because Mefo was technically a private company. And most importantly, it created massive purchasing power without actually printing new currency that would trigger visible inflation. Schacht had essentially turned 1 million Reichsmarks into a money-printing machine. By April 1938, there were 12 billion Reichsmarks worth of Mefo bills circulating through the German economy. That's 12,000 times the capital that backed them. To put this in modern terms, that's equivalent to roughly 54 billion euros in purchasing power created from practically nothing. These bills financed approximately 35% of Germany's total rearmament costs between 1934 and 1938. What made the system work without immediately causing runaway inflation was something Schacht himself explained. About half of the MEFO bills were being saved rather than spent, held by banks and companies as interest-bearing assets instead of being cashed in all at once. This meant the Reichsbank wasn't immediately flooded with redemption demands, and the scheme could continue growing. Schacht believed he was maintaining equilibrium between money creation and goods production, with each MEFO bill tied to actual newly produced military equipment. As long as factories kept producing and bills kept circulating without everyone demanding cash simultaneously, the illusion could be sustained. But every Ponzi scheme has an expiration date built into its structure, and the MEFO bill system was no exception. Those 5-year guarantees meant that by 1939, billions of Reichsmarks and bills would start coming due for actual payment, and the Reichsbank had nothing close to the reserves needed to honor them. While Schacht had created this elaborate financial architecture, private banks throughout Germany found themselves increasingly trapped within it. Initially, the arrangement seemed attractive enough. Banks received Mefo bills backed by the Reichsbank's guarantee, earning a steady 4% interest on what appeared to be safe government-backed paper. The alternative to participating was far worse. Banks that resisted found themselves excluded from government contracts, denied access to the capital market committee that Schacht controlled, and eventually faced closure or nationalization. Jewish-owned banks were systematically eliminated during this period, which conveniently removed much of the potential resistance to Schacht's schemes. As billions of Reichsmarks and Mefo bills accumulated on bank balance sheets throughout the mid-1930s, these institutions became hostages to the system's survival. By 1938, German banks collectively held 12 billion Reichsmarks and Mefo bills, an astronomical sum that represented their entire future solvency. Each bank's survival now depended entirely on the Reichsbank's ability to honor those guarantees when the bills eventually matured. But the Reichsbank had nowhere near the reserves needed to redeem them all. The crisis point arrived exactly as the mathematics predicted it would. The first Mefo bills, issued in 1934 with 5-year guarantees, began coming due in 1939. Suddenly, 12 billion Reichsmarks in obligations were about to be presented for actual payment, and the Reichsbank was essentially broke. Schacht tried everything he could think of to delay the inevitable collapse. He forced banks to buy government bonds to cover Mefo redemptions, confiscated money from savings accounts, seized insurance company reserves, and turned ordinary German citizens into unwilling financiers of the scheme they didn't even know existed. Eventually, the Reichsbank resorted to the one thing Schacht had tried desperately to avoid: printing money and risking a repeat of the hyperinflation disaster that had traumatized Germany in 1923. In January 1939, Schacht resigned as Reichsbank president. The official explanation cited bureaucratic conflicts with the finance ministry, but insiders understood the real reason. Schacht knew his creation was about to collapse, and he wanted to be far away when it did. He was replaced by Walter Funk, a more compliant and far less competent figure who would do whatever he was told. Schacht's departure was a warning signal to anyone paying attention. The architect of the system had abandoned ship, but Hitler and the regime had already identified the only solution that could prevent total financial collapse. Each conquest meant an immediate raid on the target country's central bank gold reserves, along with raw materials, industrial capacity, and slave labor that could be extracted as revenue sources to keep the system functioning. Austria had been absorbed in March 1938, and the Österreichische National Bank's reserves were seized within days. Czechoslovakia followed in March 1939, with its national bank looted before the military occupation was even complete. When Poland was invaded in September 1939, its central bank gold was taken within hours of German troops entering Warsaw. War wasn't just an ideological obsession or territorial ambition. It had become an economic necessity for regime survival. The Mefo bills were coming due, and looted gold from conquered nations was the only way to pay them. Each successful conquest temporarily solved the liquidity crisis, but also created an addiction that required continuous expansion. The Blitzkrieg strategy wasn't just militarily efficient, it was financially urgent. Germany needed to keep conquering because stopping meant the entire shadow banking system would implode and reveal the fraud at its foundation. The looting operation required more than just military conquest. It needed international financial institutions willing to accept and process stolen gold without asking uncomfortable questions. The Bank for International Settlements, headquartered in Basel, Switzerland, became the Reichsbank's primary international partner in this scheme. Founded in 1930 ostensibly to handle war reparations from World War I, the BIS claimed strict neutrality throughout World War II and continued operating as a clearinghouse for international gold transactions even as German tanks rolled across Europe. The absurdity of this neutrality becomes obvious when you examine the numbers. Germany had entered the 1930s with virtually no gold reserves after World War I reparations had depleted them. Yet suddenly, between 1939 and 1945, the Reichsbank was transferring massive quantities of gold through the BIS to international markets. The volume alone proved beyond any doubt that this gold was being looted from conquered central banks. But the BIS claimed it had no responsibility for verifying the origin of the gold it handled. A 1945 U.S. military government report would later raise serious questions about the legitimacy of BIS wartime business, but by then the damage was done. The Bank of England got caught up in one particularly embarrassing scandal when it facilitated the sale of gold, looted from Czechoslovakia's National Bank in 1939, before Britain had even entered the war. Swiss banks accepted gold deposits without questions throughout the conflict, profiting handsomely from both sides while hiding behind neutrality laws that conveniently protected them from accountability. Even American banks maintained correspondent relationships with German institutions until the United States entered the war in 1941. The international financial system wasn't just passively allowing this looting, it was actively facilitating it for profit. Here's what makes this story relevant to your life today. The Reichsbank's shadow money mechanism never actually went away. It just got rebranded with more respectable terminology. When modern central banks engage in quantitative easing, they're using the same fundamental trick Schacht pioneered, creating purchasing power outside the official system and hoping nobody demands actual payment all at once. The Federal Reserve's balance sheet exploded from $800 billion in 2008 to over $9 trillion by 2020. Buying questionable assets from banks using newly created money. which is functionally identical to how the Reichsbank guaranteed Mefo bills. The pattern repeats across different political systems because the mechanism itself is politically neutral. In the 1930s, the Reichsbank forced private banks to accept Mefo bills or face closure. In 2008, banks deemed too big to fail had to be rescued because they had become so systemically important that letting them collapse would destroy the entire financial system. In both cases, government guarantees transformed private financial disasters into public obligations that ordinary citizens ultimately funded through reduced savings value, confiscated reserves, or taxpayer bailouts. The terminology changed, but the core mechanics stayed the same. What the Reichsbank called forced bond purchases and confiscated insurance reserves, modern central banks call liquidity support and financial stability measures. What Schacht called Mefo bills circulating off the official balance sheet, we call derivatives and shadow banking instruments. The derivative exposure in the global financial system now measures in the hundreds of trillions of dollars, orders of magnitude larger than the Mefo bill scheme, but built on the same principle of creating obligations that don't officially count as debt until someone demands payment. Schacht's Reichsbank proved something that every central banker since has understood. You can create enormous amounts of purchasing power through accounting mechanisms alone, as long as you prevent everyone from demanding redemption simultaneously. The genius isn't in printing physical currency, that's crude and triggers obvious inflation. The genius is in creating shadow money that circulates as if it were real while never officially appearing on government balance sheets until the moment of reckoning arrives. That moment arrived for Germany in 1939 when the Mefo bills came due, and the only solution was conquest. The moment arrived for the United States in 2008 when mortgage-backed securities collapsed, and the solution was quantitative easing. The mechanics differ in scale and specific implementation, but the pattern remains consistent. Create shadow money, guarantee it with government backing, force institutional participation, and when bills come due, make ordinary people pay for obligations they never approved. Understanding this pattern won't prevent the next financial crisis, but it gives you something more valuable: the ability to recognize when you're being told that some new financial innovation is completely different this time, when it's actually the same old mechanism with a fresh coat of paint. The Reichsbank's tools haven't fundamentally changed in 90 years. Only the names have changed to protect the institutions still using them.